So this is my June income report from my Questrade account. So I usually download the account activity from Questrade under accounts. So I go under accounts and then I go to reports and then I go to reports account activity and then I choose my date range and then export to Excel. So I already did this and manipulated the spreadsheet a little bit just to clean it up. So I'm going to talk about the income from all accounts, so margin and registered accounts. So first I'm going to talk about the margin account, and I'm going to break it up in the different types of trades I make. So in my margin account, I do SPY put spreads. So I'm going to talk about the SPY put spreads first. So I've already filtered on SPY and I'm only including closed trades. So these are confirmed either profit or loss. So for the month of June, my SPY put spreads have given me a confirmed profit of $314 US. Now I've had a mix of trades. Most of them have been good, as you can see, but some of them are call spreads that were used to hedge against a tested put spread, and then the call spread got completely breached because of the whipsaw in the market that drops and then comes back up really fast. So because of that, some of my call spreads got completely tested, so I lost big amounts. So you can see just this one here, I lost 469 US. So actually, if I don't include that, I'd be up probably 700 US, but I have to include it because it's part of the strategy. Now, how much capital do I use for this? Well, it depends. Every Monday, Wednesday, Friday, I open a new put spread using about $1,000 of capital, but I close it. It's got 7 days of expiration, so I close it in about a week. So in about a week, I would say I use about $3,000 of capital, and then it gets recycled for the following week. Now, I do have a silly trade I made, a same-day straddle trade that I made on the SPY just for fun, I guess, just out of greed. And this one I lost about $235. So now if we include everything on the SPY, whether it was put spreads or other types of trades on the SPY, I think I'm at a loss here or a very small profit. I'm at a $78 profit if I include that same day straddle trade that has nothing to do with my regular put spread strategy on the SPY. Now these are trades I made, naked trades, so a naked put and a naked call that had nothing to do with earnings, just a regular 1 week naked put or naked call trade. So this one gives me a profit of 175 US. Now these are all my earnings trades for the month of June. And if we add them all up, it gives me a profit of $548 US. So I actually made more money from my earnings trades. So this one here was a put spread on Ulta, $36 profit. Nike here was a straddle, $118 profit. Micron was a straddle as well, but it was a $72 loss. CarMax was a straddle as well, was a $262 profit. FedEx was a naked put, $118 profit. And Chewy was naked put as well, $87 profit. And then I also had a same day straddle on Broadcom, once again just for fun, and I lost $258. So really, if we look at the same day straddles, I lost about maybe close to $600 from the same day straddles. So the bulk of my strategy is SPY put spreads, and this month, if I exclude the straddle that has nothing to do with it, is about a $300 profit. So what I like about my SPY put spreads is that it's quite passive. I mean, it doesn't take that much effort from me. Every Monday, Wednesday, Friday, I open a new put spread on the SPY, 7 days to go, and it's out of the money. So it already gives me room to win because I'm out of the money. So even if the SPY drops a little bit, I could still win. So let's say I'm looking at June 15 here, or June 16, SPY is trading at 311, then maybe I'll sell a put spread at 305, and it expires in 7 days. So all I need is that in 7 days, SPY stays above 305. Most of the time it does. If it doesn't, then it's going to be closed for a loss. But I try to minimize that loss by selling a call spread against it. So instead of having a max loss of $4, I try to bring it down to $2, for example. But then if the SPY just dropped and my existing put spread just lost, then my new put spread is going to be even stronger and even further. Because the SPY already dropped, let's say, to 305, then my next one's going to be at a 295 strike. So now I only have to worry about 295, and therefore 295 has a better chance of winning, and so on. So it's sort of a self-hedging strategy a little bit. And in this crazy market that we're in, selling puts seem to work. The only downside is when one of my short strikes on the put side gets tested, I sell a call spread. But then the call spread gets tested because this market jumps up really quickly. So that's where I tend to lose with this trade. For example, this year, July 6th, this was a put spread at around 303, I believe. And 303 got tested when SPY was trading at 298. So I sold a call spread at around 310 strike. And now the SPY just jumped above 310 and trading today traded to 315. So I sold the put spread. I brought it back up to 310. So now I've got a put spread at 310, trying to save this trade and minimize loss. So right now, if I try to close this trade, I can close it for about $3.80, but I probably collected about $3 of credits for this trade. So now for me to win on this trade, I need the SPY to trade very close to 310 on July 6th, which is Monday. Now I'm not sure if I'm going to continue with the SPY put spreads. I'm leaning more towards doing naked puts from Monday to Friday. I've got nothing against these SPY put spreads. I like them. I just want to test something else first. And if it doesn't work out, then I'm going to come back to these SPY put spreads. Definitely, I like them because, like I said, even if I'm wrong, I have room to win. And even if my existing put spread loses, my next one becomes a winner or a stronger chance of winning. And it's very effortless to place. And the return on capital is pretty good. I mean, I only use $3,000 per week. And then that $3,000 gets recycled the following week. Now, in my registered accounts, it's mostly covered calls, out of the money covered calls. For the RESP, it is an at the money covered call. So Ondel collected Canadian $267. In my RSP for the month of June, got a $63 dividend US from IWM. And then in terms of my out of the money covered calls on IWM for the month of June, I collected a total of $179 US as well. So I collected in a month more than what the dividend pays in 3 months. And then in my TFSA on the Qs, my out of the money covered calls, or right now at the money covered calls, I collected 107 US from the Qs in the month of June. So for my registered accounts, total income was about 700 for the month of June. And in my margin account, even if I include my silly activity, 543 US. So in total for the month of June, across all accounts, it's about 1,200, 1,300 US. Now, I actually don't do anything with that money. I don't withdraw it or use it. I would like to eventually live off it, but I need to get more consistent because, as you can see, every month is different. And obviously $1,000 is not enough. I want to get to a point where my strategy is consistent in the income that's generated. I would like to get to at least $3,000 US per month. And then once I get there, then I might start using it to live off of it. But right now, it's still a work in progress. And the last week of June, I actually didn't make any SPY put spreads. But if I did, I probably would have closed about $200 US of profits. All right, so if you have any questions, leave them in the comment section below. And like always, if you're going to open an account with Questrade to trade on the stock market, use one of my referral codes below. One of them gives you up to $250 back, depending on your deposit. The other one gives you $50 in free trades, regardless of your deposit. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.